AI stocks continue to headline the news. Only this month, it's been more about corrections than all-time highs. As an investor, if you're in for the long haul, then it's a blip on the radar. But with the recent market volatility, which AI stocks continue to outperform and which ones have dipped into negative territory? I want to talk about this one as well as one oversold AI stock that I actually like, both short-term and long-term. Hey, Tom here. Thanks for joining me once again, and here we go. In 2024, AI stocks have continued to perform exceptionally well, driven by advancements in generative AI, machine learning, and integration into various industries. Now, some AI stocks are in the dumps, with one actually trading below book value. Today, I want you to look at a scan that I use on all AI stocks to separate the wheat from the chaff. Now, if you work for a large company, you probably heard the term 10% of the employees that work for the company do 90% of the work, and 90% of the employees only do 10% of the work. I actually believe there's some truth to that. Just look at the stock market, for instance. 7 stocks we know of, the Mag 7, have done most of the work for the majority of the stock market. So it's no wonder that when these 7 stocks are down in their luck, it affects market averages as well. But what I want to know is what AI stocks that I follow in the top 10% of their range for this year and which are in the bottom 10%. So for that, we need to go to work. I track about 42 AI stocks that are currently optionable. Now, how many of those are at the top of their range? Guess what? Only about 5 of those 42 are at the top. And let's start with the strongest, and that is Fortinet, FTNT. Now, if you don't know this company, it's a cybersecurity firm. They provide products and services designed to protect things like networks, data services, and such from cyber threats. Now, obviously, this is an in-play industry, especially due to the recent news. I got a friend in the industry that says that his job has never been busier. Now, FTNT went from being one of the weakest stocks to being one of the strongest this year. Positive earnings have finally started to rebound the stock, but trend and volume continue, and it's recently hit 52-week highs. The rest of the 10%ers look like this. Well, we see Fortinet at the top, but Palantir and Palo Alto are also very strong as top 5%ers year to date. Take a look at the far right-hand side of this list. It shows you how close they are, with 100 being hitting new year-to-date highs. As you can see, Fortinet is at 100. Palantir, 96. Palo Alto, 95. Then you've got IBM, which is surprising me. It's made a miraculous comeback from barely being mentioned not long ago. And then finally, NVIDIA. Well, that rounds out the 10%ers, but even with its stock surging over 100% year to date, it barely made the list. You know who didn't make the list? Stocks like Tesla, Alphabet. And, these are companies that have heavy investments in AI, but they're in the middle of the pack of my 42. Now, that's nothing compared to what I'm about to show you. This list is the worst in the field, the bottom 10%ers. There's nearly twice as many stocks on this list. To make this list, you had to be at 10 or below on the far right-hand side. That means you're as close to the bottom as you can get. So, more losers than winners. This could be telling us that the industry is cooling off, or perhaps it's setting up for the next move higher. Now, most of the stocks on this list have been losing money every quarter, or even if their earnings beat, it's basically a loser that just lost less than the street expected. Or maybe their PE ratio is either non-existent or super high. Let's talk about 2 of these stocks right now. The worst one is Pros Holdings. Now, if you don't know what Pros Holdings is, they're an AI company. They have struggled with profitability this year. They operate at a loss. Most of their money goes into R&D as well as sales and marketing. They clocked it at a 1.31 on a scale of 0 to 100. If you take a look at the chart there, you can see what I say. It doesn't take AI to see this stock crashing. Now, the second one I want to talk about is a little more difficult. That's Intel, INTC. This stock got hit hard after earnings. It's sitting at about 6% off its year-to-date lows. It has seemed to find support at 18. Now, not only is Intel what I believe to be a big company is too big to fail, since the U.S. put billions into them as part of the CHIPS package, but they're actually currently trading below book value. Long term, it might make sense to own it at these levels, but what if you're a short-term trader? Take a look at this. This is a volume chart of Intel leading up to earnings. Now, average volume is about 50 million shares a day, but look what happened after their horrible earnings report. It drove the volumes of the stock up to 600%. I mean, from 50 to 300 million shares in one day. That's a lot of people that are heading for the exits. Now, as a pattern trader, we could spot panic opportunity here. Look at what the stocks did since then. I'm going to blow up that chart once again, and I want you to focus on this area right here. I'm bullish if it closes above 22. These are the type of patterns that tend to close the gap. So you see the gap between 22 and 29. I look at if we go below 18, then I'm wrong. But I see that target at 29 as closing the gap that happened before the earnings announcements it even was released. So all in all, I think AI stocks for the most part are going to go through phases like every other advancement in technology did. Think of telephones, think of mobile phones, think of the dot-com boom. There were thousands of companies that started after initial surges. Many of them closed up shop. Few prospered and made astronomical gains over time. I still think we're in the early innings of the AI phase. So with that, stay tuned and thanks for watching.